Hey everyone, welcome to 15-minute high-low plotting. So before I go into this video, I want to make sure that you've already watched the 4-hour high-low plotting video and directional bias videos before you jump into this one. Just hit pause, go and look at your notes, make sure you watch those two videos first, lay the foundations from the higher time frame, and then we can slowly but surely eat into more our low time frame, which is 15-minute for us. And then before we know it, then we're looking at entries, but just take your time going through the motions and make sure you're watching the content in the right order, please. So how do we plot our 15-minute highs and lows? So there's two ways of looking at 15-minute kind of structure and liquidity for us. The first one is the external range. And then the second one is marking the most recent fractal, whether that is also external or whether it's internal. It depends on what that 15-minute range is. If we get a larger 15-minute range, then the internal fractal is exactly that, it's internal that range. If we have a very tight, small 15-minute range, which also happens to be the most recent high or low, that can happen too. And we'll cover some examples shortly. Now the external range and the most recent are both valid for entry criteria, okay? So you can take both. Sometimes we get some questions, do we only take external range or can we factor in internal? Obviously our answer is always going to be, go and do your own testing, what does your data suggest? And when we say that with the best intentions because that's what's going to give you the confidence, okay? But the short answer is yes, take them both, right? They both work very, very well. And by marking out these ranges, we're then aware of liquidity pools surrounding current price, which we're looking for our entry criteria. So let's go into the charts. Let's cover EU. I'm going to pick June and let's just go over some chart examples. Okay, so we've got EU here on June. The first thing we're going to do, I know this isn't a 4-hour video, but it's better to make sure you create good habits, right? So we're just going to go from around this period and then work our way to the right. Want to find out what our 4-hour ranges are before we jump in, just so we can build that narrative. So we did have this candle, which was the high and the low at the same time. 2 consecutive candles, strong follow through. This is the range. So I'll just drag this all the way across. You can see it doesn't take the low, it breaches the high. Then we get bullish candle, then followed by bearish candle. So we get no follow through at that point, stays no follow through until that interaction is taken. We get no follow through again. So I'll just mark that range. New high interaction here. 2 bullish candles, we get strong follow through. So our range then would be here. Let's just drag that across. Breaches the high again, we get another strong follow through. 2 body closures straight away. And then that final one is, just looking at the digits on this, that's follow through. When it's close like that, it's best to just have a good look at the numbers. Okay, so now we've built that higher time frame structure and we know what we're looking at internally now. So let's drop down to the 15-minute and we'll start over here after this initial strong follow through to the upside. And how do we mark out our 15-minute ranges, our 15-minute highs and lows? So again, like the previous videos, we want to start from left to right, not right to left. Pick an area which is very obvious and then just work your way through. So quite clearly you can see this drops down and it creates a new high, new low, it keeps dropping down. That gets taken by this high, creates a new low, a new higher low fractal as well, so that gets taken. So let's just start from this point and start to work it through. This is the 15-minute low. And now you can see what I'm doing, I'm dragging it. Every time the low gets taken, we move it to that low point and we'll trail back to the most recent fractal. This is giving us our 15-minute external range. Like I said at the start of the video, sometimes it can be very small range. And in this case, then basically the range is also the most recent. As that range then widens, which it will do over time, you can form internal fractals inside of that 15-minute range. Right. So we don't know what the bias is over here to the left, so we're going to ignore that. We're not looking for entries anyway, but as that comes lower, again, we move our fractal high to here. This is the range for that day. Then as London basically just takes the high there, now we're starting to follow each candle and we're just following along with the fractal lows. You see what I mean? So every candle that gets taken, that just expands that range. And then the next one, and then the next one. Obviously we get a 4-hour interaction here, so you'd be back to the 4-hour, you'd be waiting for interactions on there before you move forwards. But you're looking, there's no new fractal lows, so the fractal range, external range stays where it is. Now let's just keep going. We want enough data here to see we've had no new fractal sweeps. Even this point here, the range low remains down here, no new fractal lows. This one's internal. When that gets breached, what do? We move to that candle that breached that, we drag it back, and now we've got a new fractal low. So this is our 15-minute external range. Right, this is how we're plotting our highs and lows. Next candle this one, next candle's this one. There's no new lows, the low remains where it is, and it just keeps going, right? Keeps going, takes the high here, we've got a new low. So now we've gone from a wide 15-minute range to a very tight one again. And that does tend to happen quite a lot, especially over Asia, because you tend to have a lot more consolidation over Asia, a lot less volume, which is why a lot of us decide not to trade Asia, plus in the UK we're asleep. So let's see if we can find some internal highs and lows in here. So pretty sure we can find one. This is our 15-minute range before London this day, right? Then what happens? Takes the range low. And we're looking here. Range high. Takes the range high. That low's internal. Now what's our bias during this? It'd be strong follow through. So you'd be looking for buys up here, right? And you may well have taken a loss buying off of this candle, an extended sweep, not this large candle which swept. Again, this is not an entries video, but let's show this. Let's just go back. Here's a good example. So this was our range, external 15-minute range, right? And look what happens. It actually takes the external range liquidity with this candle, but it also takes what we would class as internal. Now try and simplify things. Like, I'm going to keep going with the external range, which is plotting our 15-minute highs and lows, right? But the internal is quite simply always the most recent. That's it, right? Don't overcomplicate it. Just whatever that price action is right now, if we've just printed this one candle, that's the most recent. It's the one nearest price, right? So you wouldn't obviously buy off of this candle because it's very large, and you would have a stop loss that's probably over 20 pips for that. Or not even so 20 pips, but still. The candle is very large in comparison to all of these, and we do get an extended sweep. It drives lower before tagging in anyway. And like I say, you would have taken a loss here. Much better price, much better stop loss size, but you would have taken a loss. There's a nice counter strong follow through short here, so you would have made your money back and some after that anyway. But there's a nice example of internal liquidity, but it sweeps external within the same candle. We drag this over here. Like I say, that then takes the high, and that's the low. What does it do here? It takes the low again. Takes the low again. So this candle becomes the high and the low, which can happen. This candle takes, this is external liquidity. There's no internal liquidity on this. You see, when we have a very small 15-minute range, there's nothing inside of it. So at this point, you're only looking to take the range as liquidity, which it does. It takes that, right? Hence why you would have this as, I mean, very roughly drawn, right? A counter strong follow through, well priced, candle size. Okay, it's a little on the large size for Asia, but then since London and New York produced very similar candle size, and it's under 20 pip mark as well. It's probably more like 17, 18 on that. But let's see if we can find some more internal fractal examples. That's now the range high. And when price is pushing lower, we're just moving it every time it breaks. It doesn't have to be a fractal, right? That's not a fractal, but that candle at the time was recent price action. It's breaking the lows. And you're trailing back the high only to fractals. You're not then following every candle like this. You're only doing that when price is live, pushing lower. And if it's pushing higher, you're doing the opposite. So you're trailing your high every single candle, and the low is only moving when you get a fractal low form, right? So again, this comes all the way down here, and the fractal remains where it is. There's no internal fractal highs. And then when this breaks the low, we get a fractal high form. So it becomes a very tight range there. Again, during Asia, right? What did I say? Asia starts to kick in, you get smaller ranges. So we'd likely be asleep and we'd wake up the next morning, maybe 30, 40 minutes before London opens, and this would be the range. Now, do we have internal range liquidity on this? Yes, we do. It would be this one right here. It's not the range high. The range high is over there. It's not the range low. The range low is down here. And we have both internal liquidity on the most recent fractal high and the most recent fractal low. So what's the bias on this? It's strong follow through to the upside. We're well priced. We're in discount. We're looking for buys, right? So again, this is not an entries video, but we sweep internal before kill zone. So you would then delete that, and that's no longer a valid internal liquidity point because it's been swept already and it wasn't inside kill zone. You're also not looking for sells because we've had a bullish strong follow through and we're in discount. So you wouldn't consider that liquidity point again, right? This isn't an entries video, but we may as well go through some bits in here. We get a sweep here, valid trade, 3 to 1. Let's have a look. You'd get tagged in, tagged out. You take a -1 there. And depending on what your risk tolerance is and whether you would consider this candle a little large, which I'd say it is, it's on the verge of like 90 to 100% bigger than most of these candles. Yes, it's under the 20 pip kind of range for EU, which is like the max stop loss size we'd recommend. You might take a -1 on that as well. Or you might filter out and say, well, that candle's a little bit too large for me. It's nothing to do with the fact that I've just lost a trade and I'm not fearful of taking another loss. But if there's theory behind it, then that's what's going to keep you out. Now let's move this down to what the range would then be, which is here. Dragging it to the right. And do we have internal range liquidity? Yes, we have internal range with the most recent high there. But again, we're bullish strong follow through. We're not looking for sells in discount. So you wouldn't actually factor that one in. Do we have internal fractal lows? Yes, we do. We have this here. And does it get taken? Yes, it does. It gets taken. So you could easily take a position off of that. Obviously, it doesn't tag in. It then drives lower and takes the range low anyway. So you would remove that. So it takes the range low. You'd then put an order on this. 10 pip stop loss. Candle's not like anywhere near 100% bigger than most candles of that recent session. Actually drives lower without tagging you in, so it gets you in at a better price with a tighter stop loss. And easily, with even a much bigger stop loss than you need, a 3 to 1. So even if you did take 1 or 2 of these losses, again, you get your money back and some. So there's like potentially 2 to 3 losses in here and then 2 wins. So you're still up with a strike rate of what, less than 50%. Let's keep dragging this range forward. So our low becomes here, our high is the most recent. And then that breaches, right? You pull that to the top of that live price action candle, which is this one at the time. Have a look back, where's the range low? That becomes the 15-minute range low. And we drag that across. And you should by now have a good idea on what to do, right? This is again Asia, we're not looking for trades. You can see it takes the high, so we move the high. Does it have a new low? Fractal, yes it does. So that becomes the new fractal low. Again, Asia tends to have tighter ranges and they tend to expand after London. New range high, new fractal formed, new range low. What does it do? It takes the high. It's close to the no trade zone in this pink area, but it's outside of, and we get a counter, because we're in premium now, a counter strong follow through, 6, so 7, 8, and a 3 to 1. Even if you add, again, more breathing space and a stop loss, you're still getting a 3 to 1 out of this before the 4-hour range low, which is down here. So there's another 3%. And that's an external range. There's no internal on this one because the 15-minute range is so tight that just becomes the most recent liquidity anyway. So let's move this across. New range high, new range low. Not looking to buy in this no trade zone anyway for well priced. There will be a well priced theories video if you've not already watched it, but basically it's filtering out trades in this inside kind of 5% zone, right? Only looking for sells in the gray area up here and only looking for buys down here. If it's outside of, in terms of the sweep and the entry, then we take it, just like that one. Well worth the risk. Expand the low, range stays where it is. Expanding the low, every candle that takes it, regardless of whether it's a fractal or not, when price is pushing lower, we have no new fractal high form, so we keep it where it is. And it's only when this candle breaches the range low here that we get a new fractal high form. So what are we doing? We're moving our range low to current price and moving our range high down to the most recent fractal. Let's do this last day just to make sure there's enough examples in this. So again, it's pushing lower, pushing lower, pushing lower. It's actually a trade in here as well. An extended sweep long in here, unless you're considering this inside bar would potentially invalidate that. So we'll leave that one out. That's the low, that's the high. What we're doing, we're looking for buys. So if we're pushing this along here, and we're now through Asia again, so we're not looking for trades. What does it do? It takes the high over Asia, so we push this up. We've got a new fractal low, yes we do. So we move our 15-minute low up. Again, Asia, tight range. Creates a new low, creates a new high. Move it across, we're still not at London yet. Creates a new low, creates a new fractal high. So for London, this is what we're playing with. We get a sweep of the low before session. So this is not valid liquidity. We keep the high where it is every single candle now because we've had no new fractal high form. So during London, this is our range. Takes the high, we've got bullish, strong follow through to the upside. So we're only looking for buys in discount, not looking for sells. So what we do, we breach the high, now we move the low down to here. This last push up, we keep going candle by candle that breaks the high. We've had no new fractal low form, so we keep it where it is. Next candle, next candle, next candle, next candle, next candle. And nothing changes until this is broken up here, and then we get a new fractal low form. That should give you a really good idea on how to work left to right. The same as the 4-hour range, you work left to right on your 15-minute high and lows. You'll see there the difference between the external range liquidity and what is internal. Internal is always the most recent fractal. Depending on whether you're inside session, outside session, maybe you're over on the west side, where if you're US or Canada, you might be trading Asia. Just know, and you'll see it for your testing, you tend to not get internal liquidity because the 15-minute ranges are so tight anyway. And that's not a bad thing because we'd much prefer to take external 15-minute range sweeps anyway, just gets more clarity. And just knowing where your 15-minute ranges are is going to really save you from taking unnecessary losses and keep you more often than not on the right side of the market. See you on the next one.